What is double entry bookkeeping? In order to understand the double entry bookkeeping, we must have knowledge about single entry bookkeeping. Single entry bookkeeping is a method of bookkeeping in which each incoming and outgoing transaction is recorded as a single entry in a journal. A cash book is maintained in which debit and credit entries are recorded. A cash book will have the following details: opening balance, the cash in hand or the amount brought forward; transaction date, the date on which the transaction takes place; particulars, a short note on the transaction; transaction amount, incoming amount, debit or outgoing amount, credit; balance, the net amount of cash in hand. Let's take an example of a business owner recording the debit and credit entries for all of the transactions that take place in a month. 1. Assume that he has an $8,000 cash balance at the beginning of the month, so this will be recorded as the amount brought forward. 2. In the second week of the month, he pays rent, which is $1,000. As this is an expense, so it will be subtracted from the cash balance. $7,000. 3. In the third week, a customer pays an invoice for $1,500, which is income. So this amount will be debited and the cash balance will become $8,500. 4. In the fourth week, he purchases office furniture/fixture for $2,000. So this amount will be subtracted from the cash in hand balance. 5. At the end of the month, he will be left with $6,500 in cash. Double entry bookkeeping is a system in which each financial transaction is recorded twice, simultaneously, as a debit and as a credit, in two different accounts, and the total debits are always equal to the total credits. The main feature of this system is that the debits and credits should match for ensuring error-free transactions. The double entry bookkeeping system works on the basic accounting equation, which is as follows: assets equals liabilities plus owner's equity. Each side of the equation must balance, or we can say that the books must be balanced. Assets, owned by the company. Liabilities, which the company is liable to pay. Owner's equity, owner's investment in the company. Income, amount earned by running the business. Expense, amount the company spends to run the business. What documents are used to record entries? In single entry bookkeeping, the transactions are recorded in a cash register, whereas the double entry system starts with a journal, then these entries are recorded in a ledger. After that, a trial balance is prepared, and then financial statements are finalized. 1. Journal. This is a book of accounting in which the transactions are recorded in a chronological order. There is no need to balance it. 2. Ledger. Final entries of separate accounts are written in this book, and it must be balanced. 3. Trial balance. This is a worksheet that shows the credit and debit balance of all ledger accounts. Accuracy of transactions is meticulously maintained here. 4. Financial statements. The summary of the organization's financial results of assets, liabilities, income, expenditure, etc. is depicted in financial statements such as balance sheet, profit and loss, cash flow statements. Double entry bookkeeping is better than single entry system due to the following reasons. 1. Method of recording transactions. Single entry bookkeeping only gives a one-sided picture of transactions recorded in the cash register. The double entry system gives a complete financial picture of a company, so it is preferred by investors, banks, and buyers. 2. Error detection and correction. Double entry system makes it easy to detect and correct errors as the debits and credits must always match. 3. Company size. The single entry system is only appropriate for small businesses, but the double entry system suits all size of businesses. 4. Preparation of financial statements. Single entry system of bookkeeping isn't suitable for preparing balance sheets and profit and loss statements. Large companies and organizations need such reports to track their performance. In short, bookkeeping is essential for maintaining accurate financial records. It helps in preparing a budget, for checking tax compliance, to track the business performance, and helps in making decisions. Double entry bookkeeping is suitable for businesses of all sizes. It is a method of recording that gives a true picture of finances, protects the business from manual data entry errors, and automatically generates financial statements for the owners of businesses, managers, and accountants for decision-making.